Gold's price overall maintained a sideways motion over the past week. In today's report, we intend to lay out the main fundamental challenges ahead for gold's price, including the negative correlation of the dollar with gold's price, any financial releases in the coming week that could also have an effect on gold's price, and address possible safe haven concerns of gold traders. Finally, we will be concluding this report with a technical analysis of gold's daily chart. We make a start by noting that the negative correlation of gold's price to the dollar seems to have been blurred somewhat. It's characteristic that the dollar continued to weaken in the past week substantially, yet stabilized somewhat during Monday and today's Asian session. On the flip side, gold's price remained relatively stable in the past week and during Monday. The consistency in the movement of the two trading instruments over the pre-mentioned period tended to blur the negative correlation of the two trading instruments as perceived by the market. At this point, it should be noted that the yields of US bonds tended to send out mixed signals since last Tuesday, which is the day of our last report. Yet US yields since last Thursday have been consistently on the rise, and should the rise be magnified further in the coming week, we may see them having an adverse effect on gold's price, as the antagonistic relationship of gold with US bonds may shift the market's attentions towards the latter, given that gold bears no interest. On the contrary, it bears storage costs. On coming Friday, we highlight the release of July's core and headline PCE price index rates. The release gains on attention as the rate is the Fed's favorite measure and is considered as a key test for the US economy, along with CPI rates and the US employment report. The core rate is expected to tick up and reach 2.7% year-on-year if compared to June's 2.6% year-on-year. Should the rate accelerate as forecasted, it would signal a persistence of inflationary pressures in the US economy that may force the market to reassess its extensive dovish expectations in regards to the Fed's intentions. Should the core PCE rates accelerate, we may see the market readjusting its expectations and thus provide support for the dollar, while at the same time weaken gold prices. On the flip side, we have to note that Fed Chairman Powell, in his speech at the Jackson Hole Economic Symposium, mentioned the shift in the bank's attention from curbing inflationary pressures in the weakening US labor market, which in turn could lower the impact of the release. On a deeper fundamental level, we also note the safe haven nature of the precious metal. Maybe the most interesting issue ahead for gold is the situation of the Israel-Palestinian conflict and the Middle East in general. Hopes for a possible ceasefire seems to be fading away, and worries for an intensification of the conflict could create safe haven inflows for the precious metal. It should be also noted that the risk of an overspill of the Israel-Palestinian conflict, practically the bombing of Palestinians by Israel, could overspill and become a regional issue. Especially the risk of Israel invading Lebanon should not be underestimated, as the risk of tensions between Egypt and Israel, given the presence of the Israel Defense Forces at the border of Gaza with Egypt. Also, please note that the 20, 100 and 200 moving averages all have an upward slope, supporting the notion of a bullish outlook for gold's price. For a bullish outlook, we would require the precious metals price to break the 2,530 resistance line, which is a record high level for gold's price, and set as the next possible target for the bulls the 2,600 resistance level. Should the bears take over, we expect gold's price to break the pre-mentioned upwards trend line, signaling the interruption of the upwards movement, but also the price action to break the 2,450 support line, clearly taking aim of the 2,355 support base. Thank you for joining us today as we navigated through the dynamic world of financial news. From all of us here at IronFX, we wish you